What's up? So today we will learn how the rich people don't pay taxes. Well, they do, just probably less than you actually. This is Warren Buffett, one of the richest people in the world. Thanks to the company he runs, Berkshire Hathaway, he's rich. Like really rich. Basically, it's just a holding company that owns a bunch of other companies like Geeko or Dairy Queen, as well as a lot of stock in other companies like Apple and Coca-Cola. So when those companies do well and their stock goes up, Berkshire Hathaway stock goes up as well. When Buffett took over the company in 1965, a single share was worth $19. Today, its worth is nearly $500,000. Buffett owns nearly 240,000 of these shares. This is where his actual wealth is. But he's been pointing out one important thing. Well, pointing out, more of acting. Warren Buffett still pays a lower tax rate than his secretary. Yes, a lower tax rate than his secretary. That's because they pay different types of taxes. His secretary pays income taxes on her salary, but Buffett mainly pays capital gains taxes on his sold stock. What's the difference? Wikipedia. Income tax covers your total earnings from various sources, like a job. While capital gains tax, that's the tax on the profit you make selling investments like stocks or real estate. Yeah, and crypto is kind of difficult, so if you want a video on that, just comment down below. Income tax is progressive, so during a time period you pay percentage of your wage. Capital gains tax depends on the assets holding period. So where is the difference? Well, for income tax, you pay tax ranging to 37%. Yes, 37% of tax. And capital gain? Well, 20% at maximum. Let's say I sold some stock recently for $400,000 and my taxes on that would be $50,000 from capital gains. But that $50,000 is far less tax than anyone who has a job making $400,000 a year who would pay actually $110,000. Yeah, but if you're a billionaire, you'd have to pay taxes at all. Like literally, you don't have to pay taxes. Let's say I can look at my stock portfolio and I can say, oh, you know, I made $100 million this year. But it doesn't have to be anything in taxes because our system is based on only paying taxes when you actually sell something. Amazon's Jeff Bezos, the richest man in America, thanks mostly to his Amazon stock, pays almost nothing in taxes. We value his worth in his company, but it's never taxed unless it's turned into real money. When he sells the stock, it's taxed as a capital gain, but he just doesn't do that. So how some rich people literally pay zero taxes? Well, some billionaires like Elon Musk are able to get loans from the bank against their stocks and live off of that. They don't even need to sell the stock to turn it into spendable money. No sales, no taxes. There's also a big loophole in capital gains taxes that the rich exploit, called the step-up basis. If hypothetically Warren Buffett were to sell a stock, he'd have to pay capital gains taxes based on his profit, so the cost of the stock minus the original investment. But if he holds off selling his entire life, when he dies, whoever inherits the stock and then sells it would only have to pay taxes on what they earned after they inherited it, leaving all those original gains untaxed. It's part of what's called buy, borrow and die. And it's one of the ways that the richest families in the world avoid paying taxes at all. So yeah, if you don't want to pay taxes, be rich. Good night.